Time now to add a little octane to the show with Traders Unplugged. Pro traders Alan Nuckman and Jared Levy are fueled up and good to go. A few rounds on some hefty topics. Good morning, guys.
Morning, Andrew.
Round one, debating investments. What effect do the presidential debates have on the market and your investing? None, some, or a huge influence?
You know, I think it's middle of the road. I will say there was a definite impact. I was watching In Trade, which basically gave the probability of who was going to win as Romney was sort of building strength in the other night's debate. I saw SPU futures at the same time, SPX, moving higher about 6 points. So there's a definite correlation.
We talked about the In Trade last week and how Obama was overbought and it was time to buy Romney. So I'm using this as a point to sell Romney, take some profits. But you're going to credit this jump because of the debate? That's ridiculous. What about the first 6,000 points that got the S&P up to 4-year highs? That didn't have anything to do with the previous
I'm not going to take that away from Obama. Hold on a second. But the point is, I think Obama was completely factored in. I think Romney didn't even have a chance of winning up until last night. And I think the market's realizing.
It was down at 20, and yes, it did bounce.
Round two of the gas stunt. There's a political ploy right now of selling gas at $1.84, around the price when the president took office. Now, of course, Americans for Prosperity is backing this. They're pitching in a couple of dollars so Americans can get cheaper gas. Do we want gas to go back to those levels?
Absolutely, positively not. Anybody that thinks they want to go back to where we were is silly, if not idiotic. Gas was at that price because crude oil was at $33 because the world was coming unglued. So at the time, sugar was half price from where it is now. Coffee was half the price. A lot of these things were very inexpensive. I don't want to go back to those depression border days.
You know, it's a tough call, right? Like, I as much as I want fuel to be 79 cents, it's probably not realistic. Remember, there are people that are dependent upon fuel being at a you want to make money. Now,
you want the Dow to go back to 6,000?
No,
I don't think so.
Right, there's a balance.
Do you want the S&P go back to 700? I don't think so.
Exxon, Mobil, you know, those companies, listen, those guys need to make some money. I want to be able to,
higher
prosper.
Oil prices are showing an ability to pay worldwide in a strong global economy. That's the
Round
fact.
three. Do we have a recession already?
Is the glass half full or half empty? Depends on how you want to look at it. I say absolutely not. The stock market is the indicator of the health of the financial markets, and we're at at 4-year highs.
I'll give them 2 more seconds. All right, so from a dictionary standpoint, recession, 2 straight months of GDP decline. We haven't seen that.
in college.
Well, the market's forward-looking right now. The market's also saying that next year we're going to have 12% S&P growth in earnings. I don't think that's going to happen. So I think the market is looking ahead. I think we are headed more in the direction of recession than growth. But again, the data right now suggests that we're sort of stagnant more than anything. My problem is I don't believe that the growth or stock market prices are going to continue. And that's the problem. I'm not
you're
so much
bearish
worried
here?
about.
Are you selling here then?
Well, up until the election, I'm a buyer. After the election, depending upon who gets elected, then I'll be perhaps a seller.
Well, there's a hedge for you. I would suggest if you have profits, protect them. Like he's hedging his bets without an opinion.
Time now for the bonus round. This is a great question for you. How much money do you have to earn to be in the top 1%?
To be in the top 1%, 250.
Is it 250? I thought it was higher than that. It was like 420.
327.
420.
It's 822,000. Good to have you on the show this morning. Take care.